a comprehensive look at trends, fund profiles, and more in Exploring ETFs.
We're going to take a look now at Japan ETFs with our ETF Research Director, Nina Mishra. And there's a lot going on with Japanese stocks in the Japanese stock market. They've been moving higher over there for a while now.
Yeah, and particularly the rally picked up after Shinzo Abe's win in snap election.
Yeah.
It was a very strong victory, and it gave his party a supermajority, which is a two-thirds majority in the parliament, and it has cleared the way for more Abenomics, another push for Abenomics, which means that we should see more fiscal stimulus, more monetary stimulus, and more corporate reforms ahead.
Is that part of those three arrows that he came up with?
Exactly. So that is the main reason why stocks have been going up. And in fact, the Bank of Japan governor recently reiterated that they will continue with the monetary stimulus till they achieve their inflation target of 2%. And because of this rally, the Nikkei index touched a 25-year high last week.
Yeah.
And but it is still below Japanese stocks index level in 1989, significantly below those highs. Japanese economy has been doing pretty well. In the last quarter, the economy grew by 1.4% annualized rate. It was the 7th consecutive quarter of growth, which is the longest in 16 years. And because of growth, domestic as well as the global economy also has been improving, so Japanese companies have also been doing pretty well. In the latest quarter, corporate earnings grew 17% year over year, according to BlackRock, and that is the best for any major developed market.
So despite the surge in Japanese stocks, am I understanding correctly that they're still relatively cheap?
They're relatively cheap. If you look at U.S. stocks, which have also been rising for the past 9 years. So Japanese stocks trade at about 17 times forward earnings, whereas the S&P 500 index is currently trading at about 19.4 times forward earnings. And the Japanese authorities have also been, insisting on improving shareholder values, that companies should return more cash to investors. They should increase their dividends and share buybacks. So that is also we have seen in Japanese stocks, and that should further increase shareholder value and should be good for Japanese stocks as a whole. And due to those reasons, foreign investors have been pouring a lot of money into Japanese stocks. So last month, they poured about 3.43 trillion in Japanese equities, which was the largest monthly investment since 2005.
Right. And we had recently the yen depreciating against the dollar and the euro earlier this year. That boosted earnings as well?
Yes. So Japan is an export-oriented economy. All those big companies are mainly exporters. So they benefit from improving global economy and a depreciating currency. And the yen has depreciated against the dollar and particularly against the euro this year. So that has further boosted earnings of these big Japanese companies, and this is a trend which we expect to continue into 2018 as well.
All right, so against that backdrop, you are saying that investors may want to consider the currency-hedged Japan ETFs.
Yes, because we are expecting more Abenomics, which also aims to weaken the yen and which improves the corporate earnings in Japan. So investors can take advantage of this trend by using currency hedged ETFs, which give the benefit of stocks rise but hedge out any currency risk because yen will probably weaken against the dollar.
All right, there's a couple that you want to make our viewers aware of. First, the Wisdom Tree Japan Hedged Equity Fund, DXJ.
Yes, this is a very popular Japanese currency hedged ETF. It focuses on dividend-paying Japanese companies with an exported tilt. So all those companies which will benefit from Abenomics. It has an expense ratio of 48 basis points, very diversified with 402 holdings and big Japanese companies, well-known Japanese companies like Toyota, Mitsubishi, and Japan Tobacco are its top 3 holdings.
All right, and then there's the Deutsche X Trackers, MSCI, Japan Hedged ETF. Wow, that's a long name.
The ticker is DBJP. This is another popular currency hedged Japan ETF, slightly cheaper than the earlier one. It has an expense ratio of 45 basis points. It has 323 holdings, and again, big Japanese companies like Toyota, Mitsubishi, and SoftBank are its top holdings.
All right, let's see how they stack up.
So on this slide, I have the 3-month comparative performance of the two Japanese ETFs that we discussed. They are up about 12% over the past 3 months, whereas the S&P 500 ETF SPY is up about 5% during the same period.
And do you own either of these?
I do not.
Okay. Check out more ETF information on our website, Zacks.com. All you need to do is go to the home page, use the Funds tab in the top toolbar, and that will get you to that ETF section of our site. With Nina, I'm Terry Ruffalo.